Hi, this is the second video in the series for example sums for journal entries at the time of dissolution of firm. Let's go to the fourth example sum. Example sum 4. Pass necessary journal entries to record the following unrecorded assets and liabilities in the books of Paras and Priya. So let's go ahead with the solution. Journal, date / serial number, particulars, LF number, debit rupees and credit rupees. The first question: there was an old furniture in the firm which had been written off completely from the books. This was sold for rupees 3,000. Sale of unrecorded asset, bank account debit to realization account. Amount 3,000 rupees. Narration: being unrecorded asset, realized. Second question: Ashish, an old customer whose account for rupees 1,000 was written off as bad in the previous year, paid 60% of the amount. So we'll pass the entry through realization account, bank account debit to realization account. Amount 60% of 1,000 rupees, 600 rupees. Narration: being bad debts recovered. Question 3. Paras agreed to take over the firm's goodwill, which was not recorded in the books of the firm, at a valuation of 30,000 rupees. So, partner taking over unrecorded asset, Paras capital account debit to realization account, 30,000 rupees. Narration: being unrecorded asset, taken over by partner. Question 4. There was an old typewriter which had been completely written off from the books. It was estimated to realize rupees 400. It was taken by Priya at an estimated price less 25%. So, Priya taking over unrecorded asset, Priya capital account debit to realization account. The amount at which it was taken over is 400 rupees minus 25% of 400, or in other words 400 rupees minus 100 rupees, which is 300 rupees. Narration: being unrecorded asset, taken over by partner. Question 5. There were 100 shares of rupees 10 each in Star Limited acquired at a cost of rupees 2000, which had been written off completely from the books. These shares are valued at rupees 6 each and divided among the partners in their profit sharing ratio. So the total value of the shares is 100 shares at 6 rupees each, comes up to rupees 600. This needs to be divided among the partners Paris and Priya in profit sharing ratio. Nothing is given, so we assume it's 1:1. So journal entry: Paris capital account debit, Priya capital account debit, to realization account. Total amount of the shares 600 rupees divided in 1:1 ratio. Narration: being unrecorded asset, taken over by partners. So we are done with the entries. We'll view the solution. We'll go to the fifth example sum. Example sum 5. Amin and Harsh were partners in a firm. They decided to dissolve their firm. Pass necessary journal entries for the following: after all the assets other than cash in bank and outside liabilities have been transferred to realization account. Let's go ahead with the solution. Journal: date/serial number, particulars, LF number, debit rupees and credit rupees. Question number 1. There was a furniture of rupees 50,000. Aman took over 50% of the furniture at 10% discount, and the remaining furniture was sold at 30% profit on book value. So part of the furniture is taken over by Aman and part of it was realized for cash. Journal entry, combined journal entry: Aman's capital account debit, bank account debit, to realization account. Aman takes over 50% of the furniture, which is 25,000 rupees value furniture, at 10% discount. So minus 2,500 rupees comes to 22,500 rupees. The remaining furniture of 25,000 rupees has been sold at a profit of 30% on book value, and 30% is 7,500 rupees. So totally 32,500 rupees. So realization account is credited with rupees 55,000. being part furniture, taken over by Aman and remaining sold. Second question. Profit and loss account was showing a credit balance of rupees 15,000 on the date of dissolution. Credit balance represents accumulated profit, so we'll distribute it among the partners in profit sharing ratio. Profit and loss account debit to Aman capital account to Harsh capital account. Total accumulated profits 15,000. There is no mention of the profit sharing ratio. We'll divide it equally 1:1 between Aman and Harsh. 7,500 rupees against Aman's capital and 7,500 rupees against Harsh's capital account being accumulated profits distributed amongst partners in profit sharing ratio. Third point, Harsh's loan of rupees 6,000 was settled by paying 5,500 rupees. So we made a gain of rupees 500 rupees. We settled Harsh's loan of 6,000 by just paying 5,500 rupees. The balance 500 we will credit to realization account. Journal entry, Harsh loan account debit to bank account to realization account. The amount of Harsh's loan is 6,000 rupees. The firm is paying 5,500 rupees and there's a gain on realization 500 rupees. Narration, being Harsh's loan repaid. Question 4. The firm paid realization expenses of rupees 5,000 on behalf of Harsh, a partner, to be borne by partner but paid by the firm. The journal entry, Harsh capital account debit to bank account 5,000 rupees. Narration, being expenses paid by firm on Harsh's behalf. Question 5. There was a bill for rupees 1,200 under discount. The bill was received from Soham, who became insolvent, and a first and final dividend of 25% was received from his estate. So we'll first pass the entry for Soham becoming insolvent. The firm will have to pay the bank 1,200 rupees because it was a discounted bill. So realization account debit to bank account amount 1,200, amount of the bill Narration. Being discounted bill. Dishonored. Next part of the question, we are receiving a final dividend of 25% from Soham's estate. So bank account debit to realization account. Amount 25% of rupees 1200, or in other words 300 rupees. Being first and final dividend of 25% received from Soham's estate. Sixth, last question. Creditors to whom the firm owed 6,000 rupees accepted stock of 5,000 rupees at a discount of 5% and the balance in cash. So, creditors taking over asset against payment of dues, there will be no entry. But for the amount of payment of cash to the creditors, we will pass an entry. The rupees 5,000 stock has been taken over at a discount of 5%, or in other words, discount of 250 rupees. So 4,750 rupees of creditors is settled by taking over the stock. Balance left 1,250 rupees, which is 6,000 total minus stock taken over at value of 4,750 rupees. So this amount will be paid in cash. So realization account debit to bank account ₹1,250. Narration. Being creditors paid. The entries are done. I'll remove the split and we can view the answer.